I'm gonna be honest. It's hard to open an internet browser and not feel like a helpless passenger on the Hot Mess Express. Even before COVID, issues like climate change, human rights violations, systemic racism, and corporate abuse have left many of us feeling cynical and helpless.
And if you've taken a look at your investment portfolio, you almost can't help but ask, are my investments making these problems even worse? It's a fair question. On one hand, the whole purpose of investing is to grow your money. On the other, the cost of those profits might be quite steep on both society and the planet.
So, do you continue to take part in this system no matter the cost? Or is there a better way? Can you really make an impact with the way you invest?
Thank you to Morning Brew for supporting PBS.
From Wall Street to Silicon Valley and everywhere in between, Morning Brew is a news source aggregated and curated from major news outlets so that you can get up to speed in a few minutes.
Morning Brew News covers topics like business, finance, and tech. On Morning Brew, I learned that digital Black Friday sales increased over 20% this year to $9 billion.
And while it was no surprise that far fewer people are shopping at brick and mortar stores this year, I learned that US store visits dropped over 50% from last year.
Reading the Morning Brew newsletter, I also learned about major mergers and acquisitions over the past year, including market indices across the globe buying large data providers, which underscores the rising prominence of data analytics across the world of finance.
I could sign up in a few seconds, and I can read the daily newsletter in a few minutes.
For more information, you can visit the link in the description to sign up for Morning Brew. The bedrock of capitalism is the motivation to make a profit. But there's always been some fringe group that felt there was more to consider. All the way back to the late 1700s colonial America, subsets of Protestantism, like the Methodists and Quakers, let their moral and religious beliefs guide their investments. To them, industries around slavery, alcohol, and tobacco were immoral, and they actively avoided investing any money in them. And there you have it. The concept of impact investing was born in America.
For centuries, socially responsible investments, or SRIs as they came to be called, were synonymous with religious and moral values. But in the 21st century, the concept of impact investing began to fundamentally change with a new acronym, ESG.
First coined in 2004 by a UN Commission report titled Who Cares Wins, ESG stands for Environmental, Social, and Governance Criteria that can help an investor assess the financial strength of an investment in the modern world. That is to say, more than just being wrong or right in a moral sense, choosing companies that score highly on ESG criteria results in a better investment for society, the planet, and your pocketbook.
Over the past decade, major ratings agencies began assigning numerical ESG scores to ETFs, mutual funds, even individual companies. And while there's currently no single uniform rating standard, by looking at the scores of several agencies and understanding how they calculate their scores, you can gauge the relative impact of your investment.
So, what might have a positive or negative impact on an ESG score? Well, the E focuses on factors like natural resource use, pollution, and sustainability initiatives. Companies that make positive steps to reduce their carbon footprint or utilize greater renewable energy resources will benefit from a higher E score.
The social aspect refers to corporate behaviors that impact the public. For instance, in 2019, when Walmart decided to stop selling certain types of ammunition in response to recent gun violence, surveys found that people were more likely to shop there shortly after the decision, not to mention giving a small boost to their S score.
And governance is a measure of the ethics and transparency of a company's leaders. The doctoring of Volkswagen's emissions tests and Wells Fargo's fraudulent account openings damaged the public trust and damaged their G scores.
How much of an impact can this approach actually make? Take an example from the 1960s and 70s. American university students and teachers had begun protesting apartheid in South Africa, but momentum really began to build when they pressured their schools to completely stop investing their endowments in South Africa.
This is known as protest divestment and was a radical move when you consider that between a third and a half of the S&P 500 did business in South Africa. This culminated in 1986 when Congress banned any new U.S. investment in the country, resulting in a $1 billion loss in capital for South Africa. The economic fallout, coupled with the decades of political resistance, finally led to the end of apartheid in the early 90s.
Today, more and more companies are beginning to take the ESG movement seriously. One study found that a third of American companies say ESG ratings are shaping their overall business strategy. Larry Fink, the CEO of the world's largest investment firm, BlackRock, wrote in his annual letter that every company must not only deliver financial performance, but also show how it makes a positive contribution to society. And at the World Economic Forum in Davos this year, major financial institutions made a big show of removing carbon-heavy investments from their portfolios.
But let's talk hard numbers here. Does investing with your conscience hurt your returns? Not necessarily. A recent Morgan Stanley study compared returns for over 10,000 funds between 2004 and 2018. The study found there was no financial trade-off at all between impact-focused funds and their traditional counterparts. Furthermore, these funds seem to offer even lower risk, especially during turbulent times like this past year. This might be because sustainable practices make companies less vulnerable to things like ethics scandals or a massive oil spill.
Simply put, focusing on ESG is good business for the long term. And while impact-oriented funds have long been derided as more expensive than their counterparts, their recent rise in popularity has driven major fund companies to enter into a price war to offer the cheapest ESG funds. BlackRock and Vanguard have ESG funds as cheap as $2 per year for every $1,000 invested, while still slightly more expensive than a pure index fund. Due to the need for ESG analysis, the difference seems to shrink with every passing year.
So, how do you get started? If you're a DIYer, you can make your own custom-tailored portfolio of positive impact stocks based on their ESG ratings. Online tools like Sustainalytics allow you to compare ESG ratings for any publicly traded stock. There are also hundreds of ESG mutual funds and ETFs. Some are broad in scope, like Vanguard's ESG US stock ETF, while others have a focus that is made obvious in their ticker or name. For example, there's the SSGA Gender Diversity ETF that favors a high proportion of women in executive positions, or the iShares Low Carbon Target ETF that focuses on companies with a small carbon footprint.
The year 2020 left a lot of people sick of the status quo, longing for a change.
And in 2020, ESG funds also saw record-breaking inflows from investors wanting to build a better tomorrow.
So the question is, will you be casting a vote?
And that's our 2 cents. Hey everybody.
Hello.
So we're here at the end of the video to address some comments and questions from our last video about how your cell phone is ripping you off.
I actually learned a lot just looking through the comments of how different data is priced in different countries. We have a huge amount of people who I know watch us in India, big shout out, and your data plans are really cheap and I'm jealous. So let's start with Brent. He said, I know friends that have unlimited data just so they can stream Spotify Premium on the road. Just download your music to your phone and listen to playlists or the radio or podcasts, and Netflix allows you to download on Wi-Fi and watch later without streaming. I honestly forget about the ability to download all the time.
A little bit of planning can make it so you don't really need unlimited data. But also, if you do some planning about how you use that data of downloading videos or downloading music, it can really be doable. Dan said, I was expecting a talk on how we buy expensive phones with features most of us don't use, only to keep them a limited amount of time, or how much time we lose with phones. This is really touching on the behavioral financial aspect of this. I know a lot of us are really guilty of doing that, right? Of it's like, maybe once I buy that, then I'll use this super expensive feature on this phone or all of this storage. And it's just sort of an emotional decision.
But I think talking about how much we're spending on the phone itself is a great suggestion to look at for a future episode. Thank you. Finally, I wanted to highlight what Nicholas Shepard wrote. He said, One place I cannot recommend highly enough for viewing different plans is Whistleout, which is a website that compares many different data plans from different providers based on what you need. So I did a little bit of digging on this. I had never heard of this, so thank you. So it seems like it's pretty legit. Let me know if you've used it in the past. After we made this video, I was like, we've got to do this on ourselves because legit, we spend way too much and I just never think to challenge it. It's just one of those ones where I'm like, well, I guess I just need this because we're on our phones all the time.
We're committed. We're gonna do it.
And we will see you next time.
See ya.
Bye.
Before you go, you should check out Terra, a new channel from PBS Digital Studios with a bunch of great science shows.
You can travel to Antarctica, fly with drones, and get a glimpse inside of a wildfire, all on one channel.
Check out the link in our description and tell them 2 Cents sent you.
Thanks to our patrons for keeping 2 Cents financially healthy. Click the link in the description to become a 2 Cents patron.